Hello, folks. Tim Davis here. I want to make a very quick video because some folks are still wondering, where markets stand even after today's price action. Folks, we're still in a bear market. No matter how you slice it or dice it, we're still in a bear market, even with the VIX as low as it is. Let me show you where the VIX is. So I did a shaded area of where the VIX has been traveling since the end of 2021, and this shaded area down here shows you the top of the zone and the bottom of the zone of where the VIX has been traveling since the end of 2021. Now I want to highlight something here, and I want to make this clear that we're still in a bear market. Until we get out of the bear market, the VIX is going to be something that you really want to pay close attention to, because when it gets to extreme lows, okay, and keep in mind that within a bear market, you're always going to have, sometimes in a bear market, you have the strongest market rallies. Bull market rallies within a bear market. Some of the strongest rallies are found in a bear market, which is what we've been experiencing since October. Now, in bear markets, when the VIX gets extremely low, when it gets a really extremely low extremely low price in a bear market, and in oversold territory in a major way, the bulls are not out of the woods. Now I can see if the VIX was trading as low as it is now, broke through to the bottom of this trading range, which is what it did, and was not in deep oversold territory, then maybe we have somebody can make a case like, look, we could be in for a good long-term bull run or good bullish market. But I am not in that camp as of yet, and that's the reason being, because look how oversold. Let me just zoom in, then I'm gonna zoom back out because I want to show you guys something. Look how oversold the VIX is. Here's the VIX, and the VIX is in an oversold state. If you look at the Williams percentage, full stochastics in oversold territory. Williams percentage, oversold territory. CCI, always pay close attention to the CCI, folks, because CCI is a tool that I've been using for many years, and it tells you when we are in deep oversold territory as it relates to the other indexes. And then when it gets in deep oversold territory, normally I start to look for a shift. Now, normally that happens almost all the time. Back in the beginning of January 9th, exact. Look at that. Look how deep the VIX was oversold. And then we got a quick snap back to the moving average. See that? When the VIX gets extremely oversold, look at the CCI and start to look for this hinge up, which is what we see right here. See that hinge up in this oscillator and the CCI? It's starting to hinge up, which leads me to believe that VIX is at an extremely oversold territory. It is now agreeing with what the full stochastics is showing, what Williams percentage is showing, and what price action is showing. So that's what we look like right now. VIX is at a deeply oversold territory, and at an extreme rate. So I wanted to point that out first. Now, let me show you how it looks like in reference to the RSI as well. So I'm gonna switch to another screen where I have RSI listed as an indicator. Here, RSI, same scenario. RSI on its daily chart is at an extreme level. RSI is below the zero line, extremely oversold. Williams percentage and full stochastics has been in the oversold territory for quite some time. In the VIX, VIX is starting to show some signs that it wants to find a way to bounce. That's what these light yellow bars represents in a TTM squeeze, showing that the movement to the downside is slowly but surely is wearing out its welcome. Now let me switch back to my other chart because I want to point out something else. Switch back to my chart with the CCI. I want to point this out as well. Okay, so we're extremely oversold territory. Okay, so the VIX, no matter how low we get, we are due for a bounce, and we are definitely in an area where we can see a bounce. What happened last time when we got so overextended or so extreme to the downside? We even got lower than where we are now. Let me show you that over the past 2 years. So I'm gonna stretch this out now. So back in January of 2020. Let's see where we at. Yep, January of 2022. January of 2022. Look how low the VIX got. And if I put my cursor right here, the VIX got to 1621. 1621. So that is the extreme bottom of this range, about 16, yeah, about 1620 is the extreme bottom of this range. That was an extremely deep pullback in the VIX, and it was deeply oversold. Back then, it was considered deeply oversold. But if you look at the CCI, we are even more oversold because back then, we got to that level right there at the bottom of the range. CCI was barely oversold. So I wanted to highlight that. CCI was barely oversold. CCI was just dipping below that red line. Look over to the right. We are much lower on the CCI than we were here. But yet price action over here is not not as low. In other words, price action here is higher than price action here. So every time the VIX has found a way to get this extreme to this extreme level, the last time we were that level was the beginning of 2022, and we see what happened after that. Okay, and the VIX is in look at the CCI, it's in more extreme oversold territory as we speak right now. Okay, according to the indicators. Okay, so could we be in store for a possible VIX bounce? That is hugely, that is definitely possible. Okay, now so we're at the bottom of the range. So we're at a point right now where the VIX is almost, you know, at this point where it's going to need to show some type of resiliency sometime this week. Could it go a little bit lower? It could. And if it goes a little bit lower, that means we're going to be extremely oversold. Now, had we been, you know, the VIX been going lower where we are now, and we were, the CCI was at the top of the range, or the CCI was at the top of this indicator, and we were this low, then I would say, okay, maybe, you know, the bears are definitely going to, you know, win this battle overall. I mean, the bearish DCs, the bullish DCs, and the market's going to win this battle overall. But I don't think so, because the VIX is at the bottom part of the CCI, which is saying that the VIX is at an extremely oversold level. And normally when we get to these extremely oversold levels, as we've shown over the past 2 years, we've found a way to get a bounce. Okay, so mind you, in a bear market, the deeper the VIX goes, or the more oversold the VIX goes, the harder the bounce normally is. So just keep that in mind. The harder the bounce in the VIX normally is, and that means the deeper the pullback would be in the overall market. So keep that in mind. If we was in a bull market, I would, you know, I wouldn't put versus that way. But we're not in a bull market, folks. We're in a bear market. Until we get out of this bear market, the VIX is going to be a good indication of where prices may go next. And like I said, keep in mind that even within bear markets, there are some extreme rallies. There's extreme bull rallies within the bear market, and that's how bear markets are. You know, you go from one extreme to the next. So we had a nice, deep, strong, bullish run in the overall market since October of last year. Okay, and we're not out of the bear market yet. And we have the VIX at an extreme low, and the markets have had an extreme bounce. So yes, I still think the VIX is going to get a bounce around here somewhere at some point, because it's at an extreme oversold level. All right. So unless this VIX gets a quick bounce, goes to overbought, and then come back and just start to, you know, settle and just stay low, you know, which is always a possibility, but we're in a bear market, so I don't think the VIX is going to stay low. If we was in a bull market, the VIX could stay low, but we're not in a bull market, we're in a bear market. So wanted to point that out. Now, want to point something else out. So we're at extremely oversold levels in the VIX. Last time we got extremely oversold like that was in the beginning of 2022. And you see we had a bounce, a little pullback, and then a bigger bounce. Okay, could we be in store for the same thing here? Maybe a bounce here, maybe a little pullback, and then maybe a bigger bounce. That is a possibility. We have to wait and see how things pan out. Now, with the VIX oversold, how are the markets doing? That is another key. What are the markets doing? Are the markets showing big rallies? Are the markets breaking out of some major resistance levels and showing all-time highs? So let's take a look at it. We'll take a look at the NASDAQ futures first. And what do you know? Every time you see these markets go up, folks, don't sit there and believe from day to day that we're in a new bull market, because with all this price action in the markets, look at the NASDAQ, look at the NASDAQ future, look at what it's done since the beginning of April. Pretty much nothing, a nothing burger. So here's the beginning of April right here. Okay, it's just been back and forth in a range. Here's the beginning of April. Since we had these big 3 strong days there, we haven't really had much of anything. And here is the beginning of April. This right here represents right about April 1st. So where are we at now? Today is April 17th. So since April 17th, the market has done nothing. You've been up and down in the same range. Not a whole lot of anything. In order for the bulls or the bears to take advantage or have a big advantage, they need a big run, a big lift. So here's the NASDAQ. It has to break out of this range first of all. Okay. And it has to do it in a meaningful way and has to hold the level. So it has to break above all of these levels. So above this wick, above all of that, we need to see this NASDAQ get up to about 13,500. Get up to 13,500 in a major way. Then it made some major. It would have made a major feat. But if it continues to stay congested and go up in a big way and then come back down to the bottom, go up, back down to the bottom. If it stays within its range, it's not really doing anything. And in order for the bears to see, a big change, it has to break down below all of these. The bottom part of the range has to break down, like 12,000. Or let me see, like see about 12,600, 700. See the NASDAQ futures drop down to that level. Then the bears will be making a lot of noise. Right now, neither one has taken advantage of the sideways action. Right now, we're still in a sideways pattern. So until that sideways pattern is over, the bulls or the bears, no one has won anything yet. Okay, that is the NASDAQ. So we're stuck in a sideways pattern with the TTM squeeze getting lower and lower and lower, which says that the momentum to the upside is getting weaker. The thought process of breaking out is getting weaker. Okay, until this changes, the thought process of a breakout is getting weaker. Again, has to break out of this range for anything to be meaningful. And right now, the VIX is at an extreme low level, and price action in the markets haven't done anything. So that's not good for the bulls. With the VIX is extremely low as it is, these bulls should have been. I mean, we should have had a major breakout by now, but it has not. Has not. And the VIX has been going lower, but the price action in the markets haven't really broken out. That is what the NASDAQ is showing us, NASDAQ futures. And let's take a look at one more, and then I'll finish beating my soap opera today. Take a look at the S&P futures. So again, with a very low VIX, you want to see a major breakout above major resistance. Have we gotten that with the S&P futures? No, we have not. We have not. The S&P futures is back up to a range that it was consolidating with before. So around the beginning of January, we were back up around this area and we were bouncing around a little bit and we went lower. They're back up to this area now, right below a level of resistance, right below 4,200. 4,200 is a strong level of resistance. Okay. And someone might say, well, what if we break above 4,200? Does that mean anything? Well, we are still have 4 trading days left in a week. It has to do it on a weekly basis, and it has to hold that level. So if the VIX break out above 4,200 tomorrow, Tuesday, Wednesday, or Thursday, it has to hold that level and close above it Friday evening. Okay. Without that happening, it still hasn't made any major headway, because we could break above 4,200 and come right back down. That won't be good for the bulls. So what we want to see in the S&P futures for the bulls, they want to see a major breakout above this 4200 level, and see that continue to climb and not pull back to that 4200 level by the end of the week. Okay, so we get up to 43, 44, 4500, and then, you know, it's saying something. But without that, you know, we're still in a sideways motion, and we're in overbought territory. Looking at the full stochastics, overbought territory. Looking at the wins percentage, overbought territory. Looking at the CCI with the VIX at oversold territory. One's going to give. Just a matter of who's going to give first. All right. So hopefully that clears something up as far as where we are right now. Normally I don't come back into Wednesday, but someone you know, sent me a message and said, hey, what's up with this VIX? So I just pointed out that's what's up to VIX. So let's see what happens the rest of the week. We still got a couple more days to go. If the VIX has a major breakdown and stays down, it gets to you know, break well below those levels and shows no sign of a reversal pattern in the markets. But even if the VIX breaks down further, folks, remember that the markets have to break out. If the VIX breaks down further, but the markets have not broken out of these levels of resistance, then it's still doing nothing. So with the addition to the VIX breaking down, we need to see the markets get out of this sideways pattern. Unless the markets get out of this sideways pattern, if the VIX goes lower, the markets still haven't done anything. So keep that in mind. So once we see the markets, if we see the markets break out in a major way, then we need to see the VIX break down even further. So that's what we're looking for. Markets need to break out of this sideways action. All right, hopefully that explains some things, and I will catch you guys on the next video.